Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, and we're at the 5th of July, 2022. So, as we look at the market, it's about 7 o'clock at night, getting a little bit of a bounce. Come on, you have broken the heck out of these markets and broken them hard off the recession fears. Gold is simply not acting as an inflation hedge. I was watching Jeff Curry today speaking from Goldman Sachs, a very, very good, bright commodity guy, talking about his ideas on that too. And one of them was, oil's been a way better inflation hedge, period, than gold. And oil has broken dramatically. You know, today we did get down under $100 in the WTI because the market is thinking, and properly so to a degree, that recession's coming worldwide. And what will that do for demand? Well, to a degree, the problem is demand is somewhat elastic. You still need to heat homes. You still have to drive automobiles, buses, fly airplanes. I can go on and on. Yes, manufacturing can slip, but to a degree, it's not as elastic as people think. I'm already hearing people say, well, if the U.S. is in a full-fledged recession, we're going back to $65. I can't argue that. The problem is I don't think you'll have what's called a full-fledged recession. I think you will have unemployment climb, but where's it going? 4%, 4.1, 4.2, it's just a number. Okay, if you get a half a percentage point increase and you get 2 quarters of declines of falling GDP, you're in a recession. But because employment in America is so strong, getting a really hard, dramatic recession, no. It can happen in Europe. The problem is they got to buy oil and energy at any price they can get it. And guess what the other stupid thing is? Coal is hitting all-time highs, record highs. You know why? Because in the wonderful planning of the world, I use the world, not the United States, about how they were going to go green, people sort of forgot things. They forgot that what if there is a world war or a war with your main energy source like Europe being Russia? They were sitting there trusting Russia. They're paying a big price for it. In the United States, our stupidity. We're not going to build more refineries. The president calling all these refinery presidents he wants. They're not going to do it. Why? Because if you're committed for another decade to go green, what do you need to invest billions upon billions in a refinery for? It's a real quagmire. So what we're going to do is pay people in foreign countries to pollute the air, but we'll be able to say that, hey, we're making it green here. Okay. Well, let's get back to where the metal markets are because that's what this is about. Does anything here look friendly to you? Certainly not to me. I mean, you've gone from roughly near $2,000 to 1980 level, and you are now down over $200 an ounce. So the only thing that really proved it was good for this market was the Russian invasion of Ukraine. It petered out and fell back, and inflation did not do the job. You can't argue that. It's the reality of the situation. When you look at a daily chart of gold, there's nothing bullish on this chart. It has had a constant pattern of lower highs, lower lows. I get the gold bugs that write me. I don't know what I'm talking about. I agree with you. But I know how to read a chart. That's bearish at this point. The market is under all the key moving averages, the 200, the 100, the 18. So what could stop the market? This is what could stop the market, the Bollinger Band. You only stay under this algorithm called a Bollinger Band 5% of the time or over at 5%. You can ride it, and when you ride it and you get under it and you bounce back over it and back and forth, that can drag it down. In addition, you've come out of pretty much sideways action. Where could it go? Folks, on a real washout in the gold, anywhere from 1750 to 1700 on this particular leg. And what makes the market even more dangerous is you're trying to embed. Embedded is this. If you believe, as I do, that momentum leads price, when you embed something, it means that you've taken an oversold or an overbought condition, and instead of it correcting, it locks in. Well, it takes, and I have a course called the Enhanced Bollinger Band course that teaches this. When that occurs, it tells you that until the red line will close back over 21 or back under 79, depending where it happens from, you're going to stay with that power of the market. Now, there's a counter to it. Since you only stay 5% of the time under a Bollinger Band or above it, and that is how the algorithm works, why press the short side under that market? If the trade doesn't set up right, you don't trade it. So those are the things you have to start to learn if you're going to work with this. The gold-silver ratio, silver still is losing to the gold market. And silver's dilemma is industrial demand. It is not a precious metal. It is an industrial metal. Jewelry stores are able to pull the wool over your eyes and tell you, it's sterling silver, it's worth a lot of money. Okay. Silver in its pure form is worth $19.165. That is not $1,800 an ounce. It is 19. And you want to tell me this is a precious metal. My wife loves silver. Women love silver. It's hard to take care of. It tarnishes, blah, blah, blah. But as for jewelry, no. As for investment, it's pretty hard to tell me that that's a good investment at $19. I mean, you can buy a lot of it and get spins back and forth. But you now have how many days? You're sitting here now with, what, 3 sessions? I believe it is 3 that were, I'm not going to be able to do what I wanted. I think it's 3 underneath the Bollinger Band. You generally get a bounce from that, so pay attention to that. You have the embedded reading in copper. Now, one of these times, copper will make a low. It'll come out of left field. Markets that go like this one just went from the recent high of, let's call it the 460 zone, and you're down now to the 335 level, just give you a bounce for whatever reason. I'm bothered in copper because people aren't paying attention that some of the industrial areas of China are once again getting hit with COVID. We're not talking the big name cities like Shanghai and Beijing. We're talking inland. But the big industrial cities, now there's mass testing going to go on again. That weighs on these markets. And you're seeing that all the way through. It doesn't also help copper that every country that you look at, Australia, New Zealand, Europe, everybody's talking recession word. That recession word, to a degree, tames the copper demand. In the platinum, you're back down to the Bollinger Band. This is your support level. You have been embedded, which I've been telling you, the pros were selling this rally as this was occurring right here in these videos. They're all still there on YouTube. You tell me if I wasn't saying that. And now that you're down to the Bollinger Band, this is where you cover shorts. Can I be any clearer? I don't know that you have to cover the whole thing, but you certainly have to grab a chunk. That's what I think the pros are doing. They're covering. The palladium is a different world. Why? I do not know. I said it last week. I'm pointing it out. It's still in an uptrend. Not the strongest one that is out there. As you can see, the resistance, the upper Bollinger Band support here. And what you don't want to get under is the 3-day-ago low. If that happens, you can roll this market over and very quickly pull the plug out from under it. Last, the dollar index, reigning supreme. And you do realize we're back down in the 10-year note to 2.83, right in that zone. I don't know if you're watching the 2 10-year spread in the notes. They're like within 2 basis points, 3 basis points of each other. That's getting no play, that we might get that inversion one more time. The last time we had the inversion, because the Fed was buying aggressively, the 2-year driving the interest rates higher. On the pullback, the same thing, but different. Now the whole market's losing yield, but the 2 is holding better because that's closest to what the Fed's going to be doing. Still have this COVID cough. I'm not going to shake it for a while, obviously. So when we talk about everything that's going on, you know, in the morning, what I try to cover are the futures and the ETFs for you bright and early. Now, let me define that. At about 5:15, 5:30, I start recording my futures updates. That's Central Time. I'm telling you what's going on in Asia, Europe, the U.S., what I see in big news. Then we go into the charts. And each trade recommendation, and that's where I make real trade recommendations, is backed by the video recording the chart, me showing you the setups, why they're there, where the stop orders will be, what I'm looking for. I do this in both weekly and daily charts. Most of the time, Monday through Friday, it's the dailies. On Saturdays, it's weeklies. And I do the same thing on the ETFs. You get overall about 48 videos a month. It's a heck of a lot for just about this. In the futures, this is what we cover. In the ETFs, and as you know, a lot of individual stocks. I'm always changing through them. You'll see tonight I'm going into Google. So I'm always playing with things back and forth for you. So how do you find out about this? You go to our website, www.iraepstein.com, or just click up here. If you come up here, it'll take you right there. On the website at iraepstein.com, simply go to the word research. Everything is explained right there. I think you'll find it fascinating, and I think it's a neat way to start your trading morning off. I'm Ira. You have a great day. I will talk to you all tomorrow.